Welcome to the Northern Business Podcast and Happy New Year to our viewers and listeners. We're back looking forward to continuing to have regular discussions with people in the north of England, people who lead businesses, people who employ people, they have new ideas and they want to grow our economy. The solutions to the problem, that's the people who are on our podcast. The Northern Business Podcast is produced by Recognition PR and it serves scores of companies in different sectors, some of which occasionally contribute to this discussion. We're kindly sponsored by Virtue Motors, one of the top automotive retailers in the UK, with a network of dealerships representing some of the world's most popular brands. I'm Robb, and in the studio today we've got Martin Pullin, who's the licensed insolvency practitioner, one of them at FRP Advisory. He's one of the partners, and down the line we've Nick Johnson, corporate finance partner at Rycroft Glenton. And this is a good chance to talk to some experts in the world of business finance to see if what's being said in public really is stacking up. What is it going to be like in terms of growth or contraction in the economy? What is the outlook like, particularly for businesses in the north of England? First, well, let me get you to introduce yourselves. In the studio, Martin, tell us what FRP is.
So FRP, we are an advisory business. I suppose we are a niche within the accountancy sector. I sit in our restructuring team, so we advise businesses they've got a challenge, a financial challenge. We also have corporate finance within our team. We have a forensics division. We have a debt advisory team and a financial advisory. So we're often in and around a business that has a transaction or an event that needs some support.
Now, Nick, you're at the other end of the financial deal for businesses, aren't you, at Rycroft Glenton? You're corporate finance. So what kind of deals do you do and what kind of advice do you give? And tell us about Rycroft as well.
Yeah, I will. Thanks, Graham. So Rycroft Glenton's a very long-established regional accounting practice with its roots very firmly in the northeast. Some key stats about the business: 13 partners, 140 people, full service accounting firms. You've got audit accounting, outsourced FD, business tax, personal tax. We have a wealth management business and a corporate finance business, which is where I sit. Clients across the business are typically privately owned businesses across a range of sectors. We've got four offices in the northeast and one newly opened office in York, which we opened in the summer, which we're very excited about. In terms of the corporate finance business, we support clients in all aspects of growth, change and transformation. So we're providing strategic support and advice, helping people understand the range of options available to them and how best they might go about achieving their objectives. And we also provide a lot of transactional support and advice, covering the whole range of corporate finance. So that could be fundraising, disposals, acquisitions, buyouts, across the full range. And we're a corporate finance boutique that happens to be part of an accountancy firm. So we're very much market facing. We're creating lots of opportunity for the market rather than sort of passively sitting on our hands waiting for the wider RG client base to be doing things.
All right. Okay.
Focus on the northeastern Yorkshire, but very much UK-wide, which I think is a real strength, and that brings a lot of opportunity into the regional market.
I think that's great when professional firms can, in your case, Geordie shoring. That's exactly what I like to see. Now, Martin, you have your business is based around the country, 30 offices. Yeah. Now, let's just get a quick opinion, just your raw professional opinion, your personal opinion of what you see the state of the economy like now. Martin first.
Okay. The last budget, we were expecting a budget for growth, which was headlined. I think if we were to write a budget for growth, I don't necessarily think it would have, if I'd have written it, I don't think it would have had the detailing that it had. There are some challenges that we are all well aware about in terms of the structural deficit and in terms of the NHS and our social services, government departments generally. But my personal opinion is we need to foster an economy that can allow businesses to grow. Growth is how we're ever going to deal with the debt. I think at the moment we have had lots of uncertainty. The only certainty for the last 2 years has been uncertain. Well, the last 4 or 5 years, lots of challenges. It's made businesses more nimble. I think better prepared to deal with challenges than maybe they ever have been in terms of the issues and situations they've been through with wars in Europe and problems with COVID, etc. I think at the moment we haven't got what we expected in the budget. And the businesses that are reaching out to us for help at the moment are the larger employers. We're already seeing challenges, for example, in the care sector. pretty acutely affected by the NI changes that are coming in, and one or two other changes. There are challenges in the food supply chain for various reasons, and for various reasons. I mean, they're high employers, as you might imagine, and farmers aren't too happy at the moment. So it seems a little unsettled, but I think we've all had time to digest the budget. We are obviously at the stage where we've got a finance bill. Will all of it come into law? Will the changes in the bond market and global economy perhaps force the hand that something needs to change? But I would say, I think good businesses are still doing well. We are, you speak to many of our accountancy referrers, and I'm sure at Rycroft Lent as well, they've got clients that are in absolutely rude health. But I think businesses on the margins, businesses that haven't quite got their finger on the pulse in terms of their systems and processes, and perhaps aren't producing the right sort of decision-making information to make the wrong decisions, are going to find it difficult. I think you've absolutely got to be on your game in the economy at the moment.
And I think it's not just about, this is my opinion, but I've put it out there for discussion. It isn't just about the measures in the budget, harsh as they were, but the actual downbeat way in which the government chose to talk. I got some quotes: the worst inheritance since the Second World War, need for tough decisions. This has a chilling effect on businesses who are wanting to plan their investment. And I know of countless businesses that I'm involved with who've either put their investments on hold, or in one case, a £10 million investment was just dumped altogether at the end of December.
Yeah, it felt like we were electioneering for the next election at the start. Let's go in, let's use what was the Tories' policy last time. Let's make sure we pass all the blame to the previous government so that we have an easy ride as they came in. And the problem with that is that damages business confidence. And as you've correctly articulated there, if business confidence is down, investment decisions get put back. We're already sort of behind the G7 nations and many growing economies already in terms of growth rate and in terms of our productivity gap. We have a genuine problem within the UK there, and we need the confidence within businesses to invest. I think there's huge positives to look at, and this will be, for me, the transformational year with AI. Last year, it had a huge impact. I just see the businesses I'm dealing with now, how it's flowing through my own organisation, I think is massive. So I think there are some positives, but yes, we can talk ourselves into a problem. And I think the bond market issue, there's a lot to do with the US economy and preparing for Trump, as it were. But yeah, we can talk ourselves into problems.
I've spent Christmas and New Year in America visiting my daughter, and everywhere I went, there was a confidence we just don't hear here. There was talk of the Trump bump, and the market had the markets in the FTSE, the Nasdaq and the Dow Jones had recovered. Let's talk to Nick. Nick, same question to you, big open question. How do you, as a personal professional working in the economy, see the climate for business at the moment?
Thanks, Graham. Yeah, I mean, I think Martin's hit a lot of the key themes there. I mean, there continues to be uncertainty internationally and at home in the UK. I think there's clearly some key challenges for businesses and for the whole of the UK. We've got stubborn inflation, high interest rates, high public debt, sort of low growth, low productivity, significant need for investment, and not a lot of money to make that investment. So I mean, you can get yourself in the doom loop very quickly. And I think, as you have both rightly pointed out, I think sentiment is so important. And I think there is a big danger that that has been overdone. There are lots of great businesses doing very well. I think despite the challenges, of course, there's going to be winners and losers. There are all the time, but I think great businesses in good sectors, I think can continue to thrive in the UK. I think as far as the budget was concerned, I mean, I think the positive thing about it, I mean, there was clearly some challenges coming out of it for business, but was that it gave us at that time perceived certainty. I think what has been unhelpful over the last few weeks has been continued speculation that there may need to be another significant budget where further changes are made. So that uncertainty is certainly unhelpful. I think in terms of how we sort of look beyond, as I was listening to Ian Stewart, the Deloitte economist, earlier in the week, and again echoing CFO confidence is sort of. It's not quite at the lows of 2020 and 2022, but it's certainly sharply fallen, and that's leading to cost control and reduction focus, which will mean less investment, less discretionary spending, less recruitment. So none of these things are good in terms of, powering growth for the wider economy. But I think, the point you make around the US is an interesting one. I mean, the US is such a significant part of, overall global GDP. And there is a lot of confidence around the US. Again, Martin Sorrell was talking about that earlier this week. So how the UK sort of faces into that and gets positive about that and starts engaging with that, I think is it's a key challenge and opportunity for a lot of the business community.
I think that's right. Just quickly take the US, because we'll dispose of this with a couple of questions and answers. But one of the things that I'm seeing a lot of people talking up, they're political commentators who don't necessarily follow business as much, is the thought that Trump is going to hit UK exports to the US with tariffs. And it is true, he wants to put tariffs in, but and I write this in the Journal newspaper tomorrow. There are what I discovered is there are 3 types of tariffs. There is one global tariff, which is going to hit all imports of 10%, and he's going to try and reduce American tax by the money brought in, and that will increase the market in America. That's his first thing. Mm-hmm. The second tariff is a punitive tariff, where he uses tariffs to punish countries he doesn't approve their policies with, China being one, and we've heard about Mexico and illegal immigration and so on. And the third tariff, which I think is the most interesting tariff, is the Trump reciprocal tariff. So if you look at the US and the EU, for example, charges a tariff of 10% on motor cars being imported to the EU, but America charges a tiny proportion of that, and he wants to have a reciprocal tariff. And once you understand it like that, I think you don't need to get overwrought about export opportunities to America.
I think a couple of points there. I mean, it's interesting that in Trump's first presidency, he did bring in various tariffs, and as we've seen, Biden didn't actually rescind all of those tariffs. Many have stayed in place. Yeah. So, he is prepared to have the awkward conversations that perhaps maybe other presidents should have had. I think the other point is that the first presidency tells us that we need to, we were very knee-jerk in reacting about everything Trump said in the first presidency. And I think we've learned that we need to see what he does rather than what he says. He pre-launches an idea, almost, it's almost like sounding out the room. He does that with the Globe and global leaders. And I think we will have to actually wait and see what he actually does do. But as we know, we talked about sentiment, what Trump says dictates where markets go. So I think we kind of have to wait and see where he will follow through on some of these ideas to actually see the nub of it.
Okay, unless you had anything to add on that, I want to move on to the next subject, Nick, and that is the general appetite for investment. Now, you are, Nick, particularly trying to raise funds to put into your clients. Now, if you have private investors or large investment vehicles, at the moment, they're drawn to government bonds because the government's borrowing so much and you can get a good return. And for the private investor, it's tax-free. So you need that money, particularly for small businesses. How do you get over that? Who's willing to invest in an SME in the Northeast that's making widgets and you're acting for?
Well, that's a good point. There's sort of the caveat at the end there. I mean, I think more generally, and I'll come back to answer the specific point, because there is definitely a funding gap, which continues to be a challenge for certain businesses and certain sectors and of certain size. But more generally, I think the environment is reasonably positive. There's, depending on what you want to do as a business, if you're a shareholder who wants to sell, there's plenty of buyer appetite for good businesses. But in terms of investment, there's plenty of different types of equity providers, private equity, venture capital, private capital, family offices looking for good opportunities to invest. There's never been more variety on offer. And a lot of these funds have raised significant amounts of capital and are desperate to deploy. So that's the sort of the bigger picture. And when you look at sort of funders, there's specialist debt funds now. Again, that market has evolved significantly. So there's a lot of availability of different types of funding depending on what you're looking for. I think where it does get challenging is for businesses, of a lower scale, maybe sub 1 million EBITDA businesses or younger businesses, growing businesses, and various attempts over the years to try and address those funding gaps, with the introduction of the things like the Business Growth Fund that was supposed to address a funding gap, and they have been very active and supported lots of businesses, but there's still that gap remains, I think, for those smaller businesses and younger businesses, and how that gets addressed, I think it requires sort of coordinated effort from government, local authorities, and funders really coming together.
Yeah. Okay, that's helpful. Now, what about distress lending? You're dealing with companies quite often in distress, Martin. Are you finding the appetite to go and sort it out with lenders very much diminished, or are they taking advantage? They want to be in there, they're going to make a killing.
I think with the traditional lenders, the high street banks, they are very supportive of businesses. If we look at the environment pre-crash 2008, early part of my career, banks were more willing to appoint insolvency practitioners to take control of companies effectively. I think nowadays there is a more supportive environment. Banks, on the whole, are pretty supportive. Will work with management in often, some cases, far longer than I thought. And then fundamentally, it's about having a credible rescue plan. A way of turning a business around and the right team around you. In terms of lending in distressed situations, there are more Nick said there are more lenders out there than I can keep up with. There are, in certain circumstances, you are always going to have to give, most circumstances you're going to have to give a personal guarantee. But in the acute distress circumstances, if there is a lender that's going to willing to do it, you are looking at a much smaller field, because the majority of lenders want demonstrable serviceability on debt. If you've got a challenging business, there are a different pool of lenders that will listen to the story about how we're going to turn it around. You haven't got that serviceability. We can forecast it. And then, some of those lenders, it's to some extent almost a pawnbroker, as in, well, have we got assets to cover the debt? All right, we believe in management, they're going to turn it around. So, yeah, I think availability of lending isn't, from what I see, a major issue for the businesses that I'm dealing with. Cost of debt has risen, which is a problem, particularly as I've seen in some of the sort of property development sectors generally. But no, I don't think we have a major lack of funding opportunities, funders out there for opportunities. But in the distressed sector, we all make sensible commercial decisions, and if it's too far gone, you're not going to find a funder.
If I say this in a slightly provocative way to both of you, I'm sure you'll take it in the spirit it's meant. Every so often, you mentioned the difficulties in 2008. Then there's been the pandemic, and there was a small recession in 2012, 2013. Every so often, there are downturns, and downturns maybe are necessary. They're a natural economic phenomenon which will kill off the weakest. There's a sort of Darwin-esque element of a business's survival. I've been in business 38 years. It's a small business, but by God, you worry at night and you make sure you've got everything sorted. Do you think sometimes tough lenders, tough insolvency practitioners are necessary to kill off weak companies?
Well, as an IP, I would say that the natural flow of the economy, some businesses will always struggle and some will fail. In the 2 years immediately post-COVID, I think there was frustration in certain sectors that there were businesses. I mean, you see it often in construction, less so in others, but maybe a little bit in some of the manufacturing sectors, where you'll speak to a client and they'll say, "God, they're buying the work in. How are they doing it for that price?" And inevitably, you'll see that business fail. Yes. I think there was frustration post-COVID that there was so much COVID support that was pumped out very quickly with very little checks, particularly on the small business side, that has propped otherwise distressed and probably failing businesses for a longer period of time. And if you have a look at the insolvency rates for the last sort of 4 or 5 years, that pattern bears out. We had record low levels of insolvency coming out of COVID because of the support that was pumped into those businesses. And then we saw sort of a record year. A couple of years ago, numbers were significant, reasonably significant last year. And I don't think that is a sign that the economy within those years was particularly poor. My opinion is it's we dragged forward businesses that might otherwise have fallen, fallen into an insolvency event further forward because the COVID funding propped them up. And yet you do, if there's a business out there, we want businesses to be making reasonable, good margins to be able to invest in their workforce, in their technology, in their productivity. That is what's going to help us as an economy. It will give opportunities to our graduates and our kids. It will provide good quality jobs. It will provide more training, higher skills, better quality of life. If you've got businesses out there that are perpetually struggling and are never going to make decent margins, well, the good businesses are going to be dragged down. Margins are squeezed. No one's investing. For me, that's no good for the economy.
Nick, same question to you.
Totally agree. I think these zombie businesses are no good for the wider economy, no good for the sectors they operate in. That they sort of mess with the sector dynamics, as Martin has just said. And I think they're no good for the people who are working there either. I mean, they don't create opportunities for people. At some point, they will go, and it's probably better for all concerned if they go sooner rather than later.
Now, I want to lead this question on. As a small business, I've got a couple of larger businesses that owe a lot of money. And I've been quite robust about the collection. The lady who I work with in my small business, the bookkeeping lady, well, do we want to get robust? Do we want to get tough? I don't feel guilty about it. Being a little bit truculent, I know I've got staff. At what point would you suggest a supplier business takes firm action, by which I mean, court action or winding up action?
Okay. I think at the start, there's a decision between, is this someone who has got an inability to pay or doesn't want to pay? Yeah. And there is genuinely a difference.
Yes.
And without pressure, it's interesting when you have those difficult conversations, that next contract, that next project is just around the corner.
Yeah, it's always Yes.
So at the end of the day, if you're funding their business, then that dynamic's completely wrong.
Absolutely.
And there are ways and means. We've got a collection agency within our organisation. There are good quality lawyers in the region, but for me, it's communication and pressure. If you keep the momentum of pressure on people, I chase debts in all of my companies. I'll turn up at the premises. I'll knock on the door. I'll pick up the phone. That's the sort of thing that gets you paid.
Yeah.
I think we do have. I'm going to make a generational point. There are certain people in my organisation who may be a little bit younger. They're happy to be at the end of an email. Yeah. If people aren't paying you and that relationship's been built on a personal relationship at the SME sector, which it is with yours and certainly my business, even though we are a larger organisation now, I'm going to lean on that personal relationship. And as soon as it's not working for me and my business, then I'm going to take action and cut that client off.
Nick, do you feel the same way?
You need to raise it up their list of priorities, don't you? People will, it's human nature, will take advantage. It would be nice if everyone was super reasonable, but that's just not the real world that we live in. So, as Martin says, you've got to try and get the relationship on the right footing. We're all in business to do business, and we've got employees, we've got responsibilities. People need to, take control of that situation in the right way and not be weak. Of course, you're mindful of the importance of relationships, but that doesn't stop you having proper, difficult, direct business conversations.
I had a very good business conversation with a tech-based firm. I won't mention them, obviously, and they couldn't really afford what they were buying, so I stopped selling it to them and I restructured the amount that was owed and had a really civilized conversation. And the money has come in every month without fail. I looked the person in the eye and discussed it and wanted to help. And that is the right way. But if then that person hadn't paid after the restructure, I think that's a different conversation. Last question to both of you. And that is the opposite of that question, which is there are business owners that take a grip in a difficulty. I was talking to a business owner, large business, talking about well over 100 million a year turnover, several thousand staff. And this business had been losing money during COVID. The owner, who was an older person who was enjoying the success of his business, decided to get stuck in again, breathe life into his business career and go and do that old Clive Woodward England rugby coach thing, the sum of marginal gains, changed how much the toilet rolls cost, how many free cups of coffee there were, what the opening hours were, all sorts of little things, and got that business back into profit. tens of millions of profit actually, and turned it around through stuff that wasn't magic, but was just applying basics with rigor. I suppose in your business, Martin, that's what you're advising.
Well, absolutely. I mean, it's either times of distress or when Nick and his team are working with an organisation to get a business investor ready or sale ready, that you start to look at those, at the detail. And with success, with greater liquidity, you become more of a helicopter view on your business, which naturally you have to be, and rely on some of your team. Sometimes you do need a bit of a kick, something to shake you to say, well, actually, no, I need to get back to the basics, back to where what got me here in the first place. Yeah. How did I launch that business from zero to where we are now, and what am I no longer doing? And sometimes that, one of the things I see with businesses when they get into difficulty is they close themselves off. Yeah. That's the time when they need to be speaking to their advisors, to friends who have businesses, to professionals, because it's difficult when you're in the thick of it. When it becomes difficult, you're in the eye of the storm. And it's so difficult to step back, see the wood for the trees sort of saying, it's very difficult to step back. So having perspective from a third party, I think is really valuable. I
think it's a very good point. The other thing this person did, which I thought was very interesting, is they went in on a Saturday and opened all the post. Literally looked through all the post, and he got out of opening the post. Yeah. He got too big to open the post, and it was quite interesting. Nick, views on this turnaround?
Yeah, well, I agree again with everything Martin said. I think the other thing is trying to get perspectives. So whether it's from your advisors or people in business, or whether it's from a sort of a trusted NED chairperson, people who've been through difficult times before, I think that can be really helpful. I mean, of course, focus on the detail, ensure, you're managing the cash carefully in challenging situations, all really important stuff. But yeah, getting other people's perspective and opening up, as Martin said, rather than closing down.
Yeah, just to add one thing to that as well is businesses go through various stages of their evolution. And sometimes when we talk about going to the advisor, they're actually with the wrong advisor. If you look at sort of Nick's business, very entrepreneurial organisation, used to working around businesses that are looking to grow, that are looking to invest. Sometimes people can be left with a very good compliance advisor that has filed their accounts or that has ticked some boxes for them. But sometimes you need a more rounded, strategic approach. So sometimes I advise businesses, and I'm never there to move their existing advisor away because that's where all my work comes from. But sometimes you can see actually you need a different team around you.
You sometimes don't need instruction takers. You need people who challenge you.
Yeah.
Nick, you can have final word because we're going to wrap. Thank you.
Well, listen, I just agree with everything that you just said there, Graham. I think really enjoyed the conversation, and it's been great to participate. Thank you.
Thank you, Nick, and thank you, Martin. That's it for Northern Business Podcast, the first one back in the new year. We're going to do them every other week live at 5 o'clock on our LinkedIn channel on Recognition, but you can hear them on Apple, on Spotify, and on Amazon Podcasts, and you can watch them on YouTube or on LinkedIn, the various groups we put them on. If you want to be a guest, get in touch. We want to hear from you. Use LinkedIn to get in touch with Recognition PR, or look at us on the website. And you can talk to our podcast producer, who is Alex Dryden. And I want to also thank our technical operator, Robin Campbell. Join us next time for the Northern Business Podcast.